So we know how to use CVP to determine the number of units we need to sell or the level of revenue that we need to achieve a particular operating income. In this video, we're going to add taxes to that equation and learn how to determine the number of units that we need or the amount of revenues that we need to achieve a particular net income. So let's turn to the spreadsheet and go back to XYZ Company for the year ended 2014, and let's add taxes to it. Our operating income is $262,500. Assuming an income tax rate of 30%, we're just going to take the $262,500 times 30%, and that's our income tax expense, and subtract that, you get net income. But off to the right, I've written a couple of formulas. So operating income times 30%, that's pretty straightforward. But then operating income times 1 minus 30%. Those two numbers, income tax and net income, have to add together to become operating income, right? Operating income minus income tax is net income, so net income plus income tax is operating income. Therefore, you can arrive at net income by taking operating income times 1 minus the tax rate, or the complement of the tax rate. In this case, operating income times 70%. So let's just try that. Let's take our operating income times 70%, and that gives us our $183,750. If operating income times 1 minus the tax rate equals the net income, then by dividing both sides by 1 minus tax rate, we end up with the equation operating income equals net income divided by 1 minus the tax rate. So let's go on up to the top of the next section, and we have our standard CVP equation in there, contribution margin per unit times units sold minus fixed cost equals operating income. Let's just change that and put in net income divided by 1 minus tax rate instead of operating income, since those two are equivalent. We're going to start with break even. So think for a minute, how do you think taxes will affect break even? Pause the video and contemplate that for a minute. Do you remember what the break even number of units was? 10,000 with a revenue of $1 million. I put that into the contribution margin income statement. Our operating income is 0, therefore our taxes are 0, therefore our net income is 0. What does that mean? Well, when you're doing break even, it doesn't matter whether you're talking about operating income or net income, they're going to be exactly the same. Let's move forward though and do a target net income problem. What would happen if we wanted a target net income of $85,000? We can write the equation as 75x minus $750,000, those are our fixed costs, equals 85,000 divided by 1 minus the tax rate. So one relevant question here is, what is the tax rate? And I didn't mention it explicitly in this problem, but we can go down and find it. It's 30%. So let's change that, and then we can just solve this equation. Let's start by dividing out the 85,000 divided by 1 minus 0.3, or 85,000 divided by 0.7. And 85,000 divided by 0.7 is 121,429. Now we can add 750,000 to both sides, and we can continue by dividing both sides by 75. And so that gives us 11,620 units. We can go back to the income statement since we've got all of our formulas set up there and see how this works for us. When we put in that number, we end up with $85,050 of net income. Remember, that's a little high because we rounded the units sold up to the nearest whole number. If we wanted to know what the revenue necessary to earn a net income of $85,050, we could either put it into our statement like this, or we could just multiply by our revenue. So the equation 11,620 units times $100 per unit gives us $1,162,000. Okay, so this wraps up all of the videos on CVP.